Welcome back to Yahoo Finance Live. I'm Rochelle Akufo along with Brad Smith and Emily McCormick. Now it's our time to look at today's winners and losers. So we're going to start with our winner today, which is Upstart. Now, this company saw its stock price going up more than 30% on Wednesday after this artificial intelligence company really just smashed fourth quarter earnings. Guys, I want to bring you in here. Are you surprised by how well this company did?
I think it's noteworthy that they also announced the share repurchase plan, perhaps investors latching on to that. But when you look at the year-over-year comps that they provided, total revenue increase of 252% from the fourth quarter of 2020. They also saw fee revenue increase 240% year over year. So the question going forward could shift to how sustainable is some of this growth? And I'd be interested in hearing both of your perspectives around whether or not, for even the year-over-year comps that we're seeing at this point in time from this artificial intelligence AI lending company and platform, whether it is going to be sustainable considering the amount of lenders, the amount of the amount of loans that were necessary to really bridge so many different households, so many different small businesses at this point in time, and how much Upstart's platform is needed.
Well, absolutely, Brad. And I think just taking a look at one portion of the business that's seeing a tremendous amount of growth, and that Wall Street analysts taking a look at some of their notes following this earnings report were saying about Upstart was that the auto lending business is really going to be a source of future growth and potential here for the company as a whole. If we think about the demand that we've been seeing for cars, even if we look at the retail sales report that we got out from the Commerce Department earlier today with autos and other motor vehicle parts dealers seeing a 5.9% month-on-month increase in January, really pointing to this enormous market that Upstart is just now starting to tap into and potentially providing further upside when we think about this top line. And that does seem to be baked in to what the company is saying itself. It does see revenue of about $1.4 billion for the full year based on its forecast issued earlier. The estimate, of course, on Wall Street was for $1.2 billion. So certainly a winner there when we take a look at these latest results and guidance, and also the stock price here for Upstart. But I was mentioning some of the economic data that we got on the retail sales front. Also want to mention what we heard from the National Association of Home Builders. And that is what we would call loser of today's session, because we did see that index tick lower actually on the latest monthly report, that coming in at 82 versus the 83 that we saw in the previous month's report for January. Again, this was the lowest level that we saw since October. But guys, would love to bring you in here for your thoughts, because this is still a pretty strong reading relative to pre-pandemic levels, but again, a month-on-month decline for home builder sentiment.
I mean, this is a tough position a lot of home builders are in. You have supply chain crunches still working their way through the system. You have a lot of delays of delivery, things like cabinets. So a lot of home builders really having to wait months for some of these products, which puts a delay on everything and adds more costs. And of course, inflation. You have to figure the higher cost of all these things, also adding pressure to this sector as well.
Yeah, I think that's spot on. This is literally a purchase for many people, many households and families that is going to be one of their largest assets that they look to appreciate over time. And of course, they want to get it right, but they also want to have confidence in the market and how much they're putting into that sum of all parts type of purchase. It is literally relying on everything coming together at the right time, the pricing continuing to remain constant or as constant as possible, especially with some of the supply chain issues and the inflationary pressures that Rochelle mentioned a moment ago. And so, how could we have not expected some of the confidence to fall as delivery timelines get impacted and the parts that are necessary to put this entire purchase together for so many households and families? That is all getting thrown up in the air and in question right now. And so the home builders that we were looking at, KB Homes, Toll Brothers, some of the biggest names, Lennar as well. And there is one particular ETF that tracks across this. I believe it's XBH that we can look to really get a good sense of where home building or XHB, maybe I'm getting my letters mixed up there, but for us to keep tabs on exactly where this broader market is continuing to move for home builders as well.